Let me get started with you there. It's just been stellar, fantastic. I don't know, I'm running out of descriptions really to describe what's been happening with the markets there.
It's been a bit of a surprise, frankly. Most of us have been taken by surprise by the sudden and sharp rise in the markets. And this really came on the back of the BJP, Narendra Modi's BJP, winning the Uttar Pradesh elections. That's when the Nifty hit a record. And as you rightly pointed out, the Sensex is up about 11%. That makes it among the fastest growing or the highest among the top 10 equity markets. But experts are beginning to point out that some of these valuations are hitting record levels. And most importantly, you are seeing some of the foreign institutional investors lighten their positions on some individual stocks. But the overall macroeconomic environment, particularly from an investment standpoint, looks quite positive.
Yeah, absolutely. I want to bring in Richard here into the conversation. I mean, there's obviously been this wall of money. Harsha was just talking about the elections. Just post-election, this wall of liquidity coming into India. I mean, liquidity is a blessing in the right doses, I guess. But now you're seeing the RBI struggle a little bit and trying to siphon off what's not needed, really, in the economy.
That's right, David. And, the key background here is that the economy is still really starting to recover from the demonetization shock. That is definitely receding. Currency in circulation is starting to normalize. But in the short term, maybe even slightly longer, the banks are still flush with excess liquidity. And as you say, that's giving the RBI a bit of a headache trying to mop that up. They're doing that using open market operations. They've been sucking out over 5 trillion INR daily out of the system. But money market rates are still actually trading below their policy rate. And these foreign inflows on the back of optimism around the politics and the potential for further reform, that's just potentially adding that. And it's really leaving RBI in a very difficult position, certainly loath to intervene to hold down the value of the currency.
Absolutely. Harsha?
Richard, until recently we were talking about how interest rates may fall even further. We have the Reserve Bank of India's policy coming up next week. What do you expect to hear from the Reserve Bank from a tone standpoint?
Well, I think we've been very clear that really for several months now that RBI has probably done cutting the policy rate. We didn't think they would react to demonetization. That was a non-consensus call, which we got right in contrast to the market. And I think what we saw from them last time around was they moved to a neutral bias. I think really cementing the sense that it's going to be very difficult for policy rates to move down from here. Spot inflation is very low. The economy is beginning to recover from the demonetization shock. Oil prices look comfortable. But I think on a forward-looking basis, there are a number of factors that are going to push inflation up over the next year. Food inflation, for example, has probably bottomed out. You've got inflationary impact from the 7th Pay Commission and potentially from the introduction of the goods and services tax later in the year. So future inflation developments look a bit more problematic. So I think they stand pat very much on policy rates. As we were just discussing, I think the real issue is, are they going to be forced to actually do something about this excess liquidity, which is still dominating the banking system in the short term. So I actually think there's a good chance that we may see some sort of movement, either temporary or a formal 1% interest rate rise in reserve requirements.
Yeah, that's a very good point, just so we don't get surprised if, in fact, they do that. And I guess what you're saying is that's mainly because you're not getting the sort of reaction in the money markets in reaction, I guess, closer to their benchmark. I want to ask you about oil. It's obviously it's a key risk with low probability. If and when OPEC does manage to, say, extend those cuts, and if and when, I guess, the market then listens and oil prices go up, that could be something to consider when it comes to the economy. What's an oil price that sort of starts dragging on these numbers in India?
Yeah, I think you need to go some way north of $60 a barrel. I mean, lower oil prices have really been the fundamental game changer for the Indian economy, and I can't emphasize enough how much that is the case. I mean, 3 years ago, India was spending 5.5% of GDP on oil imports. That number's now closer to 2% of GDP. So this has been a huge windfall for the Modi administration. I think, certainly north of 65, up towards $70 a barrel, then it starts to become a bit more problematic, both from the inflationary perspective and starting to weaken those external balances, which have really come in and I think given India much reduced external vulnerability as a result.
What's the transmission effect from China? I mean, one of our other big stories this morning is this whole reflation sort of China moving out of this manufacturing recession. That's come in the form of PMIs. Input prices have come up and they've stayed up. Is there a transmission effect from China into India? And is that something that we should consider that might actually just pop inflation up a little bit more?
There is, but I think it's pretty limited. I mean, one of the black spots of the Indian economy, which, Harsha knows only too well, is the fact that there's still a number of sectors are bedeviled by very high non-performing assets. A lot of those are actually concentrated in basic industries, iron and steel, for example. So the extent that China is helping lift basic commodity prices globally, that's a bit of a reflationary salve for these sectors and maybe brings, them getting back to some kind of health a bit earlier. But generally speaking, India is pretty insulated from China and relatively insulated from global economic developments as well. Not entirely, exports definitely matter, but India is a relatively closed economy, and that's why I think it really trades almost as a sort of separate asset class within the region and to some extent within EM, and that's, I think, adding to its luster for EM investors at the moment.
I just want to bring in another element into this conversation, and that is of GST. This is a hugely transformational event that's expected in front of us. The demonetization was a bolt from the blue. The economy didn't expect it at all. But GST has been a planned exercise for the last 4 or 5 years, and it's actually coming to fruition. The disruptive effect of implementation of GST is going to be keen to watch out for. We really don't know how it's going to play out. The second is, the challenge that this government has faced over the last couple of months, perhaps right from 2014, is complete collapse in the private investment cycle. Domestic capex has not kicked off at all, and we are in a peculiar situation of growth taking place, but without any jobs being created. Richard, your thoughts on that too?
Yeah, a couple of questions there. I mean, I couldn't agree more. The introduction of the GST, which finally looks like it is now going to happen on time, July the 1st, is a potential game changer. It's really the ultimate structural reform for India. And I think, the potential efficiency gains from that, say, particularly around operational logistics. So much of freight in India travels by road at the moment. A lot of that gets clogged up at these state border points. They add something like 20 to 25% to travel time. So the potential improvements from a successful introduction from GST, I think, are substantial and could help, at least in the short term, lift Indian growth to maybe 8% or above for the next couple of years. But look, I mean, we've got to have a successful, smooth introduction. So fingers crossed from that really through the third and fourth quarter of this year. As I said earlier, I think the dark spot for India is definitely that lack of a private sector capex cycle. I don't think there are any quick fixes there. Every time I go to India, I've just come back from a research trip. The story is the investment pickup is still 4 to 6 quarters away. That seems to be a moving target. I think key is really tackling this issue of these non-performing assets. And I think what is encouraging, there do seem to be real signs coming from the authorities that there is going to be more decisive action taken on that in the next few weeks, ideally.
Richard, very quickly, I have a Bloomberg chart here. Valuations are quite high in India. Are the markets getting it right, or are they getting overexcited?
Well, I think, it doesn't seem to be too many dark clouds on the horizon for India. I think really the problems are valuation. Yes, equity markets look frothy. Our equity strategist, Manishi Ray Chowdhury, he's turning increasingly cautious on the back of this jump up we've had after the UP election. And I'd also bring in the currency at this stage as well. I mean, that's up nearly 3% since the UP election. As you said, it's been difficult for RBI to really intervene aggressively to stem its rise. Right. So the currency is looking quite richly valued as well.